Are you in YMAX, this universe fund of funds? I don't know about you, but I am. And I'm going to go over my portfolio for YMAX, and we're going to talk and find out where I actually am at on this play and what my average price is. Hello, my friends. This is Legend. Hey, I just wanted to do a video on YMAX. I don't think I've done one on YMAX yet. I do have YMAX in my portfolio, and I don't think I've really talked about it much. And I do like YMAX. I like it because it is more diversified. It does pay weekly, and it's got a distribution rate of 46%. So what I want to do is I want to show where I have purchased YMAX at. I want to show what my average prices are that I have purchased at, how many shares I own, and then I want to actually calculate what my calculated share price average is once I add back in all of my distributions, because that is very important to do, is to keep track of your distributions so that you can actually find out what you actually have at risk as far as in your capital. And that will also help you to calculate what your new average price is. And that is your adjusted price average. So let's slide over to the Webull chart and let's just see what it looks like so far. Okay, so here we are on the Webull chart. And as you can see here, this one has been out for a little while. It's been out since January of 2024. So this one's been out for just over a year. Now you can look at this and you can see that looks like it's just on a downward trend, right? It has had some rough times and it's had some drops. But if you play these right, you can come out and actually keep track of that actual price, or at least stay close to it. And then that way, whenever you're actually making your distributions and you're earning that, that's just going to take you above the actual amount that you have invested, and you'll actually be in the green. So let's just go ahead and slide over to my spreadsheet and let's see where I'm at on YMAX. Okay, so here we are on my spreadsheet. And for YMAX, since I've been in since June of 2024, and I have made several purchases, I went ahead and entered in all of that data for you to help shorten this video. So I've got the ticker symbol here of YMAX, YMAX, and it will spit out the current share price as of this video being $16.60. Now that price may be different when you view this video, but it doesn't really matter. I mean, that's just the current price for comparison of what my average price will be. So let's just go over my entries here. So as you can see here, I have several entries, quite a few entries here. So my first entry being June the 28th, my buy price was $19.53 for 200 shares. July 18th, $18.95 for 200 shares. July 24th, $18.80 at 200 shares. Now, let me go ahead and stop there just for a second and just let you know. This is when I first heard of these YieldMax ETFs. So I was just buying them up, right? I was just buying it up. Really didn't fully understand about any kind of NAV, any kind of adjustment of the price due to the distribution. I really was not aware of that, and that is on me. So that's the reason I'm doing these videos, to hopefully help you understand that you can't treat these necessarily the same as you would, say, like an ETF of, SPY or VOO or VTI, and those track the S&P 500. Those, you cannot treat those the same as you do these ETFs. These are ETFs, but they are more riskier ETFs. They do pay more, but with that comes more risk. So please make sure that you fully understand any of these ETFs or any stock actually before you would get into them. Make sure that you understand how it works and the risks of investing into any stock plays. So let's continue on here. I got October 24th, 1734, 7 shares. And then October 31st, 1739, 20 shares. November 8th, 1765 buy price for 21 shares. November 14th, 1784, 22 shares. November 21st, 1814, 6 shares. I've got 11/27, 1826, 15 shares. 12/5 at 1847, 1 share. December 12th, 1834, 3 shares. December 19th, 1759, 3 shares. December 27th, 1720 for 30 shares. January the 8th, 2025, 1673 buy price for 3 shares. And on January 27th, I purchased 6 shares at $16.40. Now, a lot of these, as you can see, it looks like about every single week I was buying. And that's because that's exactly what I was doing. I was buying right there on X date. Now, not a problem with that because your distribution comes off of the buy price on the X date. So that is potentially a good buy point. It is not guaranteed to be the low point, but it could be a good buy point. And the key there is could be. So I just wanted to make sure that this is not financial advice. Do your own research before you decide to get into any stock plays. Now, for my distributions that I earned, my first one was in September the 20th for $136.20. September 27th, $133.20. October 4th, of $124.56, and I'm just going to call out from here out just to help speed this along. For October, I have earned these distributions of an additional $122.64, $104.82, and $136.08. Then in November, I've earned $136.39, $75.18, $98.69, and the last one in November was $163.55. Now, in December, I earned distributions amounts of $211.17, $21.39, $142.86, $87.84, $96.61, and the last one for December was $170.87. And that one was a nice one. That was a nice Christmas present right there. And then in January of 2025, so far I have earned these distributions: $131.55, $101.56, $81.73, $125.73. Now, if you're looking at here and you see any of them that have the same date on it, and it has 2 different types of distributions, that is because, as I've stated in my other videos, I am part of a lending share program. And what that means is my shares could be lent out to other investors, and they being the lending program will pay me a fee, right? They'll pay me a little small fee for me allowing them to borrow my shares. So when they borrow shares, it does split that distribution up for me. So the total amount of the one on December the 9th, that total amount was actually $164.25. That is this 21 plus the 142, right? These two total amounts equals the 164.25. It's only shown 2 spots because of that program. So when it shows up in my broker, it splits out that and it pays one for the shares that were lent out and the other one for the amount that I still had in my possession that were not lent out. So if I was to cancel that program, then I would just automatically show one at $164.25 right here. So if I was not part of that, which you may not be part of it for your broker, then you would just show that one distribution amount. So I just wanted to show that and point that out just in case somebody looks and says, hey, did you mess up and enter this twice? I did not. It is how it shows up in my account. It shows it up as a split distribution amount. So not a big deal. Just wanted to explain just to make sure that if you did see these 2 dates, that you did not think that I had made a typo or something like that. So that is all of my distributions and that is all of my individual entries. So when I add it all together, I can go right up here in my handy dandy little table and I can find out and start revealing what each one is. So I have number of shares. So the total number of shares I own for YieldMax or YMAX, I should say. The total number of shares I own are 737 shares. I've got a few shares of this one for sure. So the purchased share price and then my total capital invested. So my total capital invested that I've spent on YMAX is $13,861.80. So that gives me an average price per share of $18.81. And that's just a simple calculation of the $13,861.80 divided by the number of shares that I have of 737 shares. And that gives me a new purchased share price of $18.81. So this is what, when I look on my broker, and I use Webull, when I look on there, it will show me that I have 737 shares. It shows that my average price per share is $18.81. And that, of course, that I spent $13,861.80 for those shares. But, again, is that my actual average? The 1881, so that is my average for my invested capital, but I've earned distributions. So I have earned money back. And this price per share does not take into account any distributions, any type of premiums, or any other type of earnings that I've earned on this particular ticker, YMAX. So let's just go ahead and let's add back in. Let's find out what's my total distributions that I've earned. And that can be revealed right here. I've earned $2,402.62 for my distributions in YMAX. So what does that mean as far as in my capital? Well, I now have a smaller at-risk capital because I've earned back $2,400 out of the $13.8 thousand, right? And I can subtract that off and get what my new capital at risk price or amount is. And that is $11,459.18. So with that amount, dividing that by the number of shares, I can find out what my actual adjusted price per share is. And now, as you can see, the current price of YMAX is $16.60. And that's up here in this top left box. That's the current price at the time of this video. My purchase price average with just the amount of money that I've used divided by the number of shares gives me a purchase price average of $18.81. So if that's the only thing I was looking at on my broker was that $18.81 and the current price being $16.60, well, that's to me, that I'm looking at that and I'm thinking, well, crap, I'm under on this one, right? But am I? Because that number does not take into account any distributions I've earned, any kind of premium if I've sold options against it. Nothing. It does not take into account any of that. So in order to find out what and how much I really have invested into it, I have to count that in. So that's how I get that $11,459.18 is my new capital at risk, because I've earned $2,400 of it, of that 13. So this is my new capital at risk. So what is my new adjusted price per share? Because that's important. I want to see, am I under this 1660 or am I still above it? It's very difficult to keep track of if you don't track it yourself, because it won't show up in your broker. It will show up as 1881 and you'll just always think you're underwater. So my new capital price per share, or my new adjusted price per share, I should say, is $15.55. Nice. All right. Well, I know you're thinking, well, that's not really great. The current price is $16.60, but no, I am under the current price of $16.60. Whereas before here, I was showing that I was above it, right? So this changes your whole way of thinking. This shows that, hey, this is actually working, right? I'm earning a distribution. I invested in an amount, and that distribution here is coming off of that total amount, and it's given me a new capital at risk, and therefore that divided by the number of shares I own now gives me a new adjusted price per share. This is calculated adjusted price per share is $15.55. Well, now instead of me being under almost $2 per share, so at $2, let's just see if I was just looking at that 737 shares at $18.81 being $13,861.80. So between the current price of $16.60 and $18.81, what is that difference? So we can simply do a quick calculation here, and we can type in the $18.81 minus the $16.60, and that means if I was only looking at my my broker on my phone here, it's going to show that I'm down $2.21 per share. Now that's per share, right? So how many shares do I have? Well, that's pretty easy. Another easy calculation is that $2.21 times what? How many shares I have. That's right. So it's going to show that I'm down $1,628.77. Now, for something that you're thinking that you're trying to invest into, and you're thinking, I want to keep this for the long haul so that I can make these distributions and I can earn these distributions and I can eventually get my money out of this and start making some profit. But when you're seeing this negative of $1,628.77, it sure doesn't give you that warm fuzzies of this is working, right? To that, you look at it and you're red all the time and you just don't understand. You're making the money in distributions, but you seem to be losing money, right? Well, it's because it doesn't factor in your distributions. So you have to do that. So if I was only looking at it, I would be looking at a $2.21 price under the current price, and therefore I would be showing a minus or a negative $1.6 thousand. But that's not the case, is it? So the case is I'm actually at $15.55, right? That's my price. So, whereas this one up here, you know, I should have actually used reversed that, so that would have been a negative, right? And I can easily do that. I tell you what, let me just retype that just to make it a little bit more clearer, right? Because I need to say that the current price being $16.60 minus my share price of $18.81, it's going to give the same number, but it'll show it as a negative, right? Because I am under the current price, right? That's how much I'm losing. I'm not under that price per share, but I am above it by $2.21. Therefore, I am losing, you know, money on the share price, right? Because I paid an extra $1,600 for those shares. So now let's take this and let's find out what I'm actually up by, right? So we can take this and we can say the $16.60 minus my new calculated average is $15.55. So now I'm actually up $1.05. So I've made $1.05 instead of lost $2.21. You're starting to see why this is important. This is also a very much of a mind game, right? Because this negative number up here can really just kind of put you in a funk and think this ain't working. So now we're at this $1.05 gain, right? Whereas here we were down $2 and minus 1.6 thousand. Now we can say we're up $1.05 per share. Well, I've got more than one share. So I can take that and I can say at $1.05 per share times what? Well, how many shares do I have? I have 737 shares. So now I take that and what do I have? Now I am not underwater. I'm actually in the good by $775.02. So, I mean, do you see where this is going? Do you see that this can actually change your mood, right? This can give you that little bit of encouragement that this is working. Now, this doesn't mean that it works all the time, that it's always making money, right? I mean, because it really depends on, well, when did you get in? When are you buying? How many shares you bought at what price? And everything like that. So it all determines and all depends on that. But for me, currently, if I was just looking at YMAX here, and if I was looking at my my app, it would show that I have 737 shares at $18.81, and the current price of the stock being $16.60, and you're just thinking, well, crap, you know, yeah, I've made some distributions here, but I'm under the current price. Well, by doing this calculated average, now you can start seeing and start understanding what the effects that the distributions have on the price of the shares that you own. This is just the price that you paid for it. This is what it's actually worth now, right? This is what your cost is now after you add in what you've earned, right? So I hope this is starting to make some sense. I hope this makes sense. I hope you're enjoying this, because I love to see that you know, it's changed. It changes your mind a little bit. It's a little bit of a mind thing, right? Because, like I said, 1881 and at 1660 is the price of the stock. I mean, you know, you can start saying, well, this ain't working, I'm out, right? And start just sell it all, right? Sell it right then. I'm out. I'm just going to cut my losses. And I'm not saying that you shouldn't do that, because you have to do what you have to do. You got to figure out what your risk tolerance is. The YieldMax ETFs are riskier than any other ETF, like a say like a VOO or SPY or something like that. These are riskier than that. But if you keep your calculations and you calculate what it is that you actually have and where you're at and how much you've made, then it starts changing a little bit of the mood, and you can start seeing, am I actually making in this or not? Now, if you're not, then maybe you do need to sell, right? Maybe you do need to sell it out and get out of that one. Don't know. That is your decision. You're the owner of your portfolio. You're the boss. You make the big decisions. So, but I just kind of wanted to really start really focusing in on this, because a lot of people, are buying into it, and as some of these are dropping because of the market, especially like the NVDY that I did. If you bought it at the high, or even MSTY, I've made the most on MSTY, but if you got in when it was at 46 and now it's at say 28, don't know exactly where it's at now, but it's somewhere around there, that can really bring you down. Now, granted, you still may be underwater, but at least you can start seeing it getting chipped away, right? You can start seeing that price per share getting chipped away. So if your price per share is under the current price, that means that you're in the good, right? That means you're in the good, because it's saying that at this $15.55, if I sold all of my shares right now not now, but if I sold them at $15.55, all 737 shares, I would break even, right? I would break even, because that would pay me out this capital amount, and I've earned this distribution amount, and those two added together is the amount that I've invested from the get-go, okay? So, that is just that. So if that's that 15.55 gives me a break even, then if I sold them at the time of this recording at $16.60, then what would I actually make? Well, we can do a little quick calculation on that too, and find out if I sold them at that $16.60, how much would I actually have earned? So we can do a quick calculation of $16.60, and we can take that times the 737 shares that I own, and that's going to give me $12,234.20. Okay, so that is if I sold those shares. Now, is that all I have? Nope. Don't forget, you have your distributions in there as well. So if I want to add that plus my distributions, I can simply say this $12,234.20 and add back in my total distributions. That's going to give me a total of $14,636.82. That's how much I would actually have earned, or my new amount that I would have, but that's not how much I actually gained, right? Because I did pay to get into this. So what's the difference? Well, that difference here is the $14,636.82 that I now have, minus the amount that I originally invested, the amount that I took and paid to get those 737 shares, and that's going to give me that $775.02. And that's kind of what we did down here as well, but I just wanted to show, a different way of calculating it, and that is what it is here. So that is, earning that amount from selling those shares at the $16.60. Again, I just kind of did it a little bit of a different way so you can see the total capital coming in, and then the subtracting the two capitals and ending up with the exact same amount as before, where we took the 1660 minus the 1555 to give us our $1.05 difference between our calculated average and the current price. and then that times the number of shares, giving us the $775.02. So as you can see, they both come up to the $775.02, and that is how much we would actually make if we sold them at the current price of $16.60. Now, if you did that, of course, you would not get any more distributions, but I just wanted to show you that if you're only looking at your broker on your phone or your computer and you're seeing that share price, that is the share price of the amount that you've invested divided by the number of shares that you bought. It does not take into account your distributions. So you need to make sure that you try to do that. So that gives me my percent earned here, my last one, of 17.33%. 17.33% on YMAX. So not too shabby with YMAX. So don't think just because that chart is falling like it is shown here, because as you can see here, I mean, you can draw a line and it's a downward slope, right? It's a downward slope in the price appreciation is negative, but I am still making money because my distributions are counteracting the price drop, right? And I am still making money even in the difference. So I think I'm going to wrap it up right there. I hope all this is making sense, and I hope y'all are enjoying this. Again, like I said, I'm enjoying it because one, this is helping me to understand where I am in my positions. Because before, I was a lot like probably a lot of y'all. You're just kind of looking at your phone and you're looking at your price per share, and you're seeing my price per share is $18.81, and the current price is $16.60. So that's under my share average. So I'm going to buy it. Well, you can do that. That is your decision, and you make your own decisions. But by looking at this now, at that $16.60, I would prefer that it drop below my new calculated average of $15.50 or $15.55, and this number here, right? So if I can get that share current price of the stock below this, then I'm not averaging up on my calculated average. So I'm not eating into my distributions, right? I'm not taking away from that. But if I am buying above this, then I am. And that's okay if you're building your portfolio of that particular ETF or stock or whatever it is you're doing. If that is your plan, then that is your plan. That's fine, because you can't always buy it under that price. So sometimes you are averaging up just to build your position in that stock. But if you can buy below that, then you would average down on your average, right? And ultimately that's what you want. Ultimately, that is what you're looking for. So anyway, I think I'm going to wrap it up right there. Don't forget to like, subscribe, and share this video. It'd be greatly appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.